Hang Seng is down 200 points right now. The Taiwanese index down 75 points.
Chairman Powell will, try not to lock himself into a course of action in September.
Reports come in at the 20-day moving average, which is the 24,500 mark roughly. Bank is down about 0.25%. 50,671 is where the Nifty Bank is open.
We have a current order book of around 40,000 crores.
We should be in a position to ensure that the wheel of economy keeps on moving.
The balance part of the fiscal, I believes that it should grow between 7 to 8% kind of thing.
And it's a quiet Wednesday morning. Benchmark indices are trading sideways.
The Income Tax Department, in its recent Central Action Plan for the current fiscal, has asked all its field formations to keep a close vigil on IVF clinics and medical colleges.
Approximately, this is a deal of 14,000 crore rupees.
Small caps, they continue to do well, and so do the mid caps. Not big moves there, but definitely better than the benchmarks.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal Studios in Mumbai.
Well, it's a green screen after a red start in the morning. That's, I think, the best way to put it. We're not up by a whole lot, but it's not small either. From the lows, of course, we're up a solid 70-80 points. On the day, there's 40 on the Nifty. This is Closing Bell, last hour coming up. We're coming to you from the CNBC-TV18 Motilal Oswal Studios. I'm Prashant. With me, my colleagues Reema and Surabhi. Guys, hi, good afternoon.
Hi. It would have looked so much better if the banks had participated, right, today?
Yeah. Actually, it's been such a narrow day. The range of the Nifty is all of 100 points. 100 points from the high to the low. We've been ambling around in that range, but there's a lot of action. Actually, if you look at the micro-cap index, the small-cap index, that's where the momentum seems to be. So it's that broader market, which is where I think the action is.
No, absolutely. And small-cap index is up 1%. Micro-cap index, I think, is up a bit more. So I think there is no real dearth of single-stock action, which is, out there on your screen. The micro-cap index. I'll get to that in just a bit, but the Nifty has recovered from the lows, as I said, by a solid 70-80 points. And the good thing is, after dipping briefly below that gap zone, which is 24,686, it's come back above it once again. So, you don't want to get back into that trading zone once again. I mean, you've taken that out, now you want to stay above it. Even actually in the last 30 minutes yesterday, it was looking a little iffy. The adjusted close was above it, was closer to 24,700. Today, again, we broke it briefly, but we are back above it. So let's see. Bank Nifty, of course, under pressure. It showed strength and promise yesterday. Actually, the top 5-6 gainers were all financials on the Nifty yesterday. That's missing completely. On the way down, supports for the Nifty Bank is basically the simple low that we saw earlier this week, which is 50,283. That's about 150 odd points away from where we are now. FMCG, Pharma are sectoral gainers. Yesterday, of course, it was IT. IT is taking a bit of a backseat. Real estate and PSU Banks are the ones which are under pressure. PSU Banks outperformed yesterday. Some of it just feels like flip-flop. Go into it and then sort of go into something else. A lot of rotation, really. Small cap index is up about 1% once again. So broader market is really sparkling and very, very vibrant screen like it was yesterday. Reema.
Well, individual stocks are sparkling in trade, but at the index level, it's been fairly unexciting. As Subhi pointed out, we've moved in just about a 100-point range between 24,650 to 24,750. And within that, the markets have been swinging. Europe, too, is not doing too much. Frontline European indices are up anywhere between 0.1% for the FTSE, going up to about a 0.3% gain for the DAX and the CAC. There's lots of important data to watch over the next 2 days. So whether it's the flash PMI for the US tomorrow, the Jackson Hole on Friday. So the markets are firmly going to keep their eye on that. And ahead of that, things have been quiet and fairly sideways. Banks are dragging their feet. So the Nifty Bank has been an underperformer today, down 400 points, 0.75% gone on the banking index, with names like HDFC Bank, State Bank of India, ICICI Bank, all under pressure. Week to date, though, markets continue to inch up. So slowly and steadily, week to date, the Nifty is up close to about 0.8%. The mid-cap index is up 1.2%. So the march higher continues, though in baby steps.
Absolutely. That granular move on the large cap screen is on. But the big screaming moves in the mid-cap and small-cap market, let me just point out some of them. So if you're looking at interesting gainers, Nykaa really stands out. There were some block trades on the stock today. It's been up 9 to 10% ever since. That's the interesting one. We'll get you the latest buzz on some comments that came in from Mr. Piyush Goyal on the e-commerce policy framework and what the country is looking at. There is a policy that's in the works. We don't know what shape and form it's going to take. But his comments were, they really caught the attention of the market as well, because he's saying that, there needs to be protection for the small retailers as well. Let's see the reaction and how it plays out. Zomato has started cooling off since, we put out some of the highlights of the comments. We'll play out the bites. We'll get Parikshit in on that story as well. But look at the sell down on Zomato. Now it's beginning to show up. So that's one active side of the market. Other than that, yesterday you heard from some of the innerwear companies. Today also those stocks are up and about. Look at Lux Industries, for instance, 7.5% up. These companies were sounding quite optimistic when we had them on Bazaar yesterday. Aside of that, some of the other big newsmakers of the day include PNB Housing Finance, 8% after the block trade happened in the morning. And then there are, of course, the shipbuilders, which have bounced back in style and in a big way today. Mazgaon Dock is up 5.5%. Cochin Shipyard is up about 2.5%. So this is where the stock selection is going on, stock picking is going on. Overall, of course, it's the financials and the bank Nifty that remains a bit of a sore spot. So let's get started with the trades that you could consider now in the last 1 hour. We have Mitesh joining in as always. Mitesh, good afternoon. It's a very range market. It's all about individual stock strategies. Tell us, what are you looking at? And also, if you do have an index trade, do share that with us.
Actually, I was looking to buy into Bank Nifty, but that's hardly managed to rebound from lower levels. So still not buying into the index because, one, the Nifty is not showing any signs of an upside traction. And I think the Bank Nifty coming into play could have added to the strength, but that's missing. So avoid the index. As you rightly said, it's a stock-specific market. Grasim for me, that's one of the buy calls. Recommend here, buying here with a stop at 2635. Look for targets of 2740, 2750 to begin with, and maybe even eventually higher levels. And HDFC Life is making a fresh swing high. So buy here with a stop at about 709 and look for targets of 750.
Thank you very much for that. And it continues to be a season of block deals. So today, two big ones took place, PNB Housing Finance, and the other one is in Cyan DLM. PNB Housing Finance, after this big block deal, is actually higher by nearly 8.5%. There is a clean out trade by General Atlantic. So, at least that supply overhang is out of the way. Abhishek joins in with the details. Abhishek.
PNB Housing Finance is up in trade today. Now, sources do tell us that General Atlantic Singapore Fund has sold stake in PNB Housing. So, a large block took place today, about 1.39 crore shares, which is more than 5% of the equity in PNB Housing Finance. So, floor price was set at 775 per share, which was at a discount of 4.5% to yesterday's closing price. However, the trade took place at 803 per share, which is 3.5% above the floor price. This is a clean out trade because more than 5% equity was what General Atlantic was holding in PNB Housing Finance, and they have sold their entire stake. It's a clean out trade over there, and the sold BRLM is IFS Securities to this block. Back to you.
Okay, thank you very much for that. Prakash Diwan is also with us, joining in on the show. Prakash, housing finance is a very competitive space, and a lot of the big boys, have also entered this space very aggressively. What are your thoughts on PNB Housing Finance and its right to win?
Good afternoon, everyone. So I think it has all the ingredients to make it big. It has done so well. There was a phase of consolidation which has been very healthy. The numbers took some time to kind of move to the next level of growth and then be better than market performance on an average. Where they score probably is the ability to scale up this business now that they have easy access to funds, their balance sheet is strong enough. So I don't see any reason why they can't do what a Canfin Home did in its peak, or what an LIC Housing Finance has always been expected to do. Because see, one of the advantages that some of these companies sit on is the low cost of funds, or at least a short pipeline of funds, which doesn't kind of upset the cost ratio. So that is a big advantage. But there are smaller companies that have come into the fray in the last few years, which also have the right to scale up and win, if you will. you have something like Aadhaar Housing. It hasn't got much of history in the listed space, but if you look at what they've been doing, there is enough and more to give you an indication that they at least have a very strong credit model and a distribution reach which meets their expectation of expanding basis of their balance sheet. So, when you look at these kind of smaller companies, you probably have a higher delta. But yeah, PNB Housing Finance definitely is one of the best. And with this overhang of this 5% equity, which was always talked about coming into the market, I think that's kind of also out of the way in that sense for the stock to perform. But I'm talking more from a performance perspective. Most of these housing finance companies should do well as the cost of funds starts kind of diminishing or reducing possibly early next year, calendar 25.
Okay, all right. So that's LIC housing and some of the housing finance plays. Let's look at Pharma, because in today's range-bound market action in terms of the large cap space, Pharma is really finding takers. Divi's been right on top. There's been some buying in Dr. Reddy's as well. The Cipla up about 1.5%. So it's overall looking fairly good. We have Ekta joining in. She's looking at a bunch of pharma companies. Ekta, on Divi's, it's pretty interesting, right? 3.5% of an up move. What's the buzz there? Anything specific with respect to any launches in the US?
Well, yes, I'll start with Aurobindo, which is in focus as CNBC-TV18 has accessed the warning letter which was issued by the US drug regulator to Aurobindo's arm, Eugia's Unit 3. Now, Eugia Unit 3 was inspected from Jan 22nd to Feb 2nd earlier this year. It was issued 9 observations. Eventually, it was classified as an official action indicated status in May of 2024, which means that there is a heightened risk of regulatory action on this particular facility. The US FDA has said that they reviewed the company's response, which was given in Feb. Now, Elara has said that the warning letter points out significant data integrity issues apart from other issues in this particular warning letter by the US FDA. Timeline for remediation could be more than 18 months based on cases that they've seen in the past. New products will not be approved until all of the issues are sorted. And it is an important facility. It is estimated to contribute around 30% of Eugia's total revenues and 5% of the total company revenue. Now, the import alert, however, according to Elara, seems unlikely at this stage. And the company is also dual filing products in order to mitigate risk. Besides Eugia Unit 3, it is also being filed from the new Visakhapatnam plant that they have, and hence that is expected to mitigate risk. They have an accumulate with a target price of 1568. Now, Divi's Labs is in focus because there's a Bloomberg Law article indicating that the US FDA's approval of the generic version of Novartis's heart failure drug, Entresto, which is basically a blockbuster drug, has now been paused. Now, it's been paused because the US Court of Appeals has ordered that there has to be a pending resolution of an appeal which is filed by Novartis before things can move ahead. Why does Divi's benefit? Is because they are one of the suppliers of this particular drug to Novartis, and hence it becomes an important drug for them. We don't know the timeline in terms of approval for the generic version, but as of now, what we can say is that there is some amount of temporary relief.
Okay, so that explains it, because I remember when the stock was under pressure on expectations that this drug is not going to be as big for Divi's now, but maybe some relief coming in. Thanks, Ekta, for explaining that to us, along with, of course, the other stocks in focus as well. Prakash, hi, good afternoon. Divi's, any interest?
I think very clearly the commentary is fairly positive. I mean, you can expect some of these positive triggers to come in phases, if not all on day one. And that's precisely what happens to a business or to a stock that's seen a bottoming out on most counts. So, what's happened to some of the other names, so be very clearly the largest ones, is likely to be replicated in the ones that have not seen any salience come through. So the Lupin, Ciplas, Sun Pharma of the world have already seen a fairly significant comeback in the US. And I don't see any reason why Divi's will not participate in that. There have been delays. There have been no setbacks otherwise. They just got a lag which is catching up with. So I'm quite positive on it. I mentioned that even at the time of the earnings call, the commentary was fairly robust. So the numbers didn't look very, very promising. But most large pharma names are probably still offering you some space to hide. And then you have the mid-cap pharma also joining the bandwagon, the Dishman of the world, the Syngenes, whether it's Morpin, Copra. And there are lots of names that have started kind of looking up in terms of the business metrics. So interesting space, but it's a fairly large space. So, you'll probably have a huge variety of names being thrown up with every trading day.
No, absolutely. And coming back to you, Prakash, for more, but I want to play out an important soundbite. Now, speaking at a report launch of, the report is titled Net Impact of E-Commerce on Employment and Consumer Welfare in India, Piyush Goyal, who's the Minister of Commerce and Industry, said that the exponential growth of e-commerce firms in India is a matter of concern rather than something to be proud about. Listen to that comment, and then we'll bring in Parishad to put this into context.
Are we going to cause huge social disruption with this massive growth of e-commerce? And I don't see it a matter of pride that half our market could possibly become a part of the e-commerce network 10 years from now. It's a matter of concern. But I'm not wishing away e-commerce. It's there to stay. But I don't deny that e-commerce has a role. But we'll have to think very carefully and cautiously what that role is, how that role can be in a more organized fashion. Is predatory pricing policies good for the country? When Amazon says we are going to invest $1 billion in India and we all celebrate, we forget the underlying story that $1 billion is not coming in for any great service or any great investment to support the Indian economy. How many mobile stores do you see now in the corner? And how many were there 10 years ago? Where are all those mobile phones? Will only Apple or the large retail sell mobile phones and their accessories? Of course, I don't deny that technology will play its part. Technology is a means to empower, is a means to innovate, is a means to meet consumer requirements, probably sometimes more efficiently. But we'll have to see that this grows in an orderly fashion. We will have to see that this connectivity, this convenience is citizen-centric. It democratizes or socializes the benefits to larger sections of society. It ensures that in the race for market share, and a growing market share at 27% a year, we don't land up causing huge disruption for the 100 million small retailers across the country who also serve.
Well, those are very interesting and intriguing comments coming in. Intriguing because it's no less Piyush Goyal making those statements. Now, is it just acknowledgement of the ground reality, or is it a hint to something more? Let's put those comments into some context. My colleague Parishad from Delhi is joining in to do exactly that. Parishad, take it away. Well, how should we read this?
Well, this is not the first time that Commerce Minister Piyush Goyal has actually hit out at some of these large e-commerce players in the country. A few years back, speaking at an industry forum, he had said that the likes of Amazon, Flipkart and big global e-commerce firms are not doing any favor to India by investing billions of dollars. In fact, he has been pushing for protecting the interests of small traders, brick and mortar stores in the country, traditional traders whom he believes and the government believes the traders wing of the BJP also believe will be hurt by predatory pricing, discounting policies and use of data by large e-commerce players in the country. This draft e-commerce policy has been in discussion since 2016. In 2019, a draft was circulated. Since then, there have been stakeholder discussions. There have been more than 80 meetings on the e-commerce policy over the last 5 years or so. We believe that discussions were complete. All stakeholder consultations were over about a year back. The government and officials who've dealt with this policy believe that there is now consensus on how to go ahead with the policy, but a final draft proposal is now pending approval with the the topmost levels of the government. Now, when is that approval going to come? No one knows. There is no clarity on that. We do see a very strong statement being made by Piyush Goyal, and that makes one think whether this policy will now receive a final approval. Well, the status is that this policy proposal is ready. It is awaiting approval. When that approval will come, no one knows. But yes, the trader community, which has strongly backed the BJP in the past, the Confederation of All India Traders, whose president is somebody like Praveen Khandelwal, a member of parliament from the BJP, from the Chandni Chowk constituency, they have strongly welcomed the Commerce Minister's statement on e-commerce.
Okay, Parikshit, thank you very much for that. So this has been brewing, festering for a while, but will the government bite the bullet, and will the draft e-commerce bill finally see the light of the day? Prakash is still with us. Prakash, this is going to spark a lot of debate, but where do you stand on Mr. Goyal's statements?
So I think you need to understand that it is a concern that he's voiced, which is fair enough, because we still have a significant segment of a market that's dependent on the mom and pop shops, and that part of the economy is something which could hurt very badly and have a cascading effect. But having said that, you contrast this with the need to set up the ONDC platform. Now, if the government were to keenly do that, that is something which is an enabler for smaller outfits to participate in the e-commerce journey rather than exclude themselves out of that. So, I think it'll probably be it's a tightrope that the government is walking for sure. But I would believe that they'll come up with a solution that's not retrograde in that sense, but it'll probably be more progressive, more mindful of involving everybody, and the other stakeholders also kind of would engage. So I really won't read too much of a concern in that. How do we benefit from the stock market? I mean, it only kind of gets more players in the organized delivery space to be benefited. So, the likes of delivery and all of that, companies that are building a lot of platform and network effects, around their businesses, those are the ones that will benefit. But I wouldn't really read too much as yet till we see the policy and the verdicts thereof.
About 2%. I've got the stock up. Nykaa is its own story today because of the block trades, but delivery is down about 2%. Zomato is down about 1.25%. Prakash, before we let you go, we'll go over the policy and the draft when it comes. But in the meantime, Zomato is about 7% off its peak. Would you buy or stay away?
I think it depends on what your horizon is going to be. As I said, the journey that Zomato has cut out for itself, ahead of itself, in that sense, for the next few years is very positive. It's very constructive. But it all depends on your ability to be able to withstand that kind of volatility that will be there as the news flow goes around. Here you had a trade that happened, a significant trade, and there are questions being asked saying if the so-called insiders are exiting when things are looking up, what's a mismatch? So it's a question of conviction. I would definitely like to add more of it at lower levels, and I'm sure there will be lower levels because it still hasn't matured in terms of the price discovery should be. I mean, there's still lots of ifs and buts around it, but the model is, we discussed this the other day, it has its data richness and all those, the qualitative aspects apart from the numbers that will kind of always keep it at a premium valuation. So you don't expect a crash from here, but at least, some softening, and you could probably add that time. I'm not too worried. In fact, it's good if it's retraced a bit, and people who have missed out can also participate in that at lower levels.
Okay, all right, Prakash, we'll leave it on that note. Thanks very much for joining in. You have a good rest of the day, and we'll look forward to connecting again soon. Right now, a break. We come back on the other side, and we'll have Gautam Duggar joining in. It's almost curtains at the Motilal Oswal Financial Services Financial Conference. So we'll find out how the event has been, what the mood is like on India, and of course, the market.
Welcome back. You've got the market, which is up 45 points now, 24,750. Gautam Dugar is with us, Head of Research, Institutional Equities at Motilal Oswal Financial Services, as the Motilal 20th Annual India Conference comes to a close later today. I think, Gautam, great to have you back on the program. Thank you for your time. You know, when we spoke with Ramdevji on Monday when the conference was kicking off, he said, well, he'd be watching on for two things, two main things. One is when will foreigners return, and if they will return or they'll be deterred by valuation still. And second is what is happening on the ground, because post-COVID recovery has been not even. It's been very varied across sectors. Why don't you answer your impressions on, with regards to both those questions?
Hi, Prashant. Good afternoon. Thanks for having me. So we'll focus more on what's happening on the ground, because whether FIs return or not, right now it doesn't seem to have a much bearing on the market. So as far as what's happening on the ground is concerned, I think two important things that I could gather from the CEO tracks as well as some of the company meetings I've had the chance to attend. Rural seems to be turning around now. There are confirmations from many sectors where they are seeing good green shoots pick up in rural consumption after last 2 or 3 years. So there is some impact of a good monsoon which is coming in, and also low base which is helping. Plus some of the companies will also benefit from the pricing impact that will come through from September, December quarter. Festive season expectations are building up in sectors like auto, consumer discretionary, consumer staples. So that is one element. Second, there is expectation that private capex will now start picking up. There are some signs of that happening already, gradually though, and the expectations are that they will build up further. That's what multiple corporates representing industrial segment have been talking about, whether it is green energy, renewables, or some of the traditional capex-oriented spending. As far as the first question is concerned on foreigners, yes, they are finding valuations very expensive in India. Relatively, yes, large caps are still reasonably priced at about 20-21 times Nifty, but mid caps and other broader segments of the market are very expensive, and that is what is deterring them, and which is also in a way reflected in the flows. This year's YTD flows from FI side now are down to just about $2.7, $2.8 billion versus a month back that number was about 8.5. And domestics on the other hand is chugging along very well. YTD domestic flows are almost nearing $35 billion. So that's why I said it doesn't matter as to when FI flows turn positive, because right now market is not too bothered about that particular segment of the capital.
Gautam, hi, good afternoon. Good to hear that. Good to hear that. But then how to marry this with your analysis at the end of first quarter, right? Because the fuel of every bull market, apart from money, the other important thing is obviously earnings. And then as one looks deeper into your strategy note after the first quarter, I'm looking at a couple of parameters. You know, the beat to miss ratio, which you say has turned a little more unfavorable, 43 companies missing estimates, 29% reporting a beat. And even the upgrade to downgrade number, that's very, very interesting, because 46 companies' earnings have been upgraded and 107 companies have been downgraded. So just take us through this, because you do acknowledge that earnings momentum is slowing down. Then what about the constant fuel for this bull market, the unending appetite for stocks that we have here with the domestic liquidity?
So Surbhi, if you recall, FY24, the first quarter was very strong. The last year we started at the peak as far as earnings growth was concerned, and then progressively we kept on moderating. And fourth quarter FY24 was the weakest in terms of the growth within that full year, if you compare the 4 quarters. FY25, it is completely reversed. We are starting right at the bottom as far as earnings are concerned for the year, and then progressively we are expecting the earnings to pick up. Overall, we still expect about 11% earnings growth for our coverage and 12% for Nifty for FY25. Last year, FY24, our coverage earnings were up 30% and Nifty earnings were up somewhere close to 25%. So base is quite strong, not just of last year, but last 4 years compounding also. If you see, Nifty profits have more than doubled from 3.5 lakh crore in FY22, close to 8 lakh crores in FY24. So that's about 23-24% compounding. Yes, on that heavy base, this year's number looks slightly moderate, and it doesn't help that the year is begun on a very somber note as far as first quarter is concerned. But also remember that first quarter also had a heavy drag from OMCs. I mean, if I look at my 269 companies, the growth was just 1%. But the moment I remove those 3 companies and look at the other 266 companies ex OMC, the growth is about 12%. Right? Similarly, for midcaps, our coverage universe of close to 85 midcap stocks reported a 5% earnings decline, which was in line. But again, in midcaps also, if I look at numbers excluding oil and gas, the growth was close to 25% for midcap earnings for 1Q FY25, which was better than expectations. So you have to look at numbers in totality, not...
No, I'm so sorry to come in there. I'm doing exactly that. I'm only sticking to the one big number that you gave us, which is 10 to 11% earnings growth for the full year, right? Assuming, like you're saying, that the second half is going to be better. Yeah. But if I look at 10 to 11% earnings growth full year for a market trading at almost 20 times, bordering 21 times, then what are we really talking about? That valuation question which Ramdevji sort of raised, it becomes a huge burning question, does it not?
So, Surbhi, 1 year's growth doesn't decide P multiple of the market. Last year, we had a 30% earnings growth. Market didn't trade at 30 times for Nifty earnings, right? So 10-year average is 20 times for Nifty. Right now, we are trading close to 20.5 times. If this year's earnings growth is about 11-12 and FY26 our expectation is about 18%, then we are talking about a compounding of 14-15%. So I agree that valuations are not leaving too much room for safety, even for large caps. So it is important that market spend some time in this range. Consolidates, time corrects. The problem, Surbhi, is in the mid and small cap part of the market, where valuations are just too expensive. So mid cap index, as per our numbers, is trading at 35-36 times 1 year forward. So that is a big premium of almost 75-80% premium to Nifty, which is unsustainable in my view. So that is an index where there is a problem. Small cap index trades at 27-28 times. That is again an index where there is a problem because usually it trades at 20-25% discount to Nifty. Right now it is trading at a premium. So those are bigger concerns rather than just Nifty. And 1 year's earning will not change multiples much. What if the next quarter earnings are of 15%? Right? If the full year average is 11 and first quarter's number is 4%, that basically means that the rest of the 3 quarters markets are expecting the earnings to pick up. You can build the narrative either ways that earnings are finally picking up after the worst quarter of the year is behind. Or you can say that for the current valuation, one particular quarter numbers are very bad. So these valuations are not sustainable. So that is something which the investor has to grapple with.
Absolutely. Take your point. And you answered, that because next year you're expecting the growth to pick up to 18% FY26. So at an average, I guess the point is that we're still looking okay. Reema.
Gautam, hi. So just want to drill down to individual sectors. So very recently, you all had upgraded IT to an overweight, citing an expected recovery. Now, there is a question mark on the strength of the US economy. Whether or not it goes into a recession, there are telltale signs of a slowdown. So based on your conversations with technology companies in the conference, is there any risk to the expected recovery in IT stocks in the growth rates for this year or next year? Because the IT index has given a 25% return in the last 2.5 months.
Yeah, Reema. So IT stocks have done really well. We've had an underweight for a long time. We upgraded it to overweight in July. Not on the basis of any big pickup in earnings. The thesis behind our upgrade and moving it to overweight in our model portfolio is twofold. The sector has underperformed for too long. So relatively the valuations vis-a-vis other sector in the index were looking relatively better. Second, we were trying to move element of defensive component in the model portfolio slightly higher, given the concerns on the broader market valuations. So those are the two reasons why we moved IT from underweight to overweight. As far as the commentary of IT companies are concerned, I think we've all, again, just recently seen in earnings season also, so there's not much change as far as commentary at our conference is concerned for IT sector. Everybody's in a wait and a watch mode. People have a lot of debates that are going on the quantum and timing of the US Fed cuts as to how that eventually pan out for the US corporate spending on technology and digitization. So there are a lot of moving parts over there. Easy money has already been made in IT. So like you rightly mentioned, in the last couple of months, IT sector, especially the large cap, which were languishing for a very long period of time, they started moving up and now they are taking a breather. I think the next catalyst again would be as we move closer to the 2H FY25, how does the guidances of various large IT companies change? I think that will now decide the next move in the IT stock. I expect them to remain in a very tight range now because the market has rewarded them ahead of the recovery.
Got it. Gautam, thank you for joining us. Before I let you go, let me ask you this, slightly offbeat, but 3 days now you've been there meeting so many people. Tell us something that really sort of, made you go, wow, I didn't know that. You don't have to name who you heard it from, but was there a wow moment? Were there many?
There were many wow moments, especially in our CEO tracks. There were 15 back-to-back CEOs, representing almost all segments of the economy. For me, particularly, the most unique and wow moment was the Zepto CEO track, because the kind of insights our investors gathered from that CEO track was pretty rich. And the sheer fact that they're growing at a pace in quick commerce, within 2 to 3 years, they've reached a size which is unheard of. So there were a lot of granular insights which he shared, which definitely was the highlight of the conference for me.
And we will read about it in a report from you, Gautam, which would be as insightful. Thank you very much for joining us. Great conversation as always, and a wonderful conference there at Motilal. We'll take a quick, I don't think we'll take a break. We'll focus on Nykaa, which is basically up 10%, fresh 52-week high. Mangalam is here to tell us what's sort of behind the move. Mangalam, over to you.
Well, a lot of excitement around Q-commerce and e-commerce. I presume that's something that's doing well. And we were, talking about how skincare as a category has been doing extremely well in the fashion space. The masstige category, which is a premium, bridge to premium sort of category. And the stock today is at a 52-week high. There were large trades of almost 0.1% equity worth nearly 60 crores between 11:40 and 12 p.m. today itself. And the company is trading at, or the stock is trading at around 12 times average that we've seen. That's about today. It was just last week that they reported their numbers, where there was a 23% revenue growth in the first quarter, 30% EBITDA growth, net profit on a low base actually tripling, almost 14 crores versus 5.5 odd crores itself. The beauty business did well, 23% revenue growth with an improvement in the margins as well, whereas the fashion business grew 21% on a revenue front and also saw contribution margin improve by about 587 basis points. The company's been focusing on operational turnaround out here and increasing the share of revenues that they get from their own brands, along with the scale of their B2B vertical as well. So there have been a lot of triggers for Nykaa going forward. Are all of them falling into place or not is something that we're looking at. But seems like a lot of volume which is being traded on the stock today is betting on things to fall in place.
Okay, thank you very much for that. Now we'll get into that break. We'll come back and get in some technical calls from our experts. Stay tuned.
Welcome back. Well, we are down to the final 15-odd minutes of trade. So let's look at some final strategies that we could consider. By the way, the market's having a nice swing right now. In fact, this is fresh high. Just breaking through that 100-point band that we were discussing earlier on. Mitesh is back with us. Mitesh, I remember we were talking about this. You were saying the Nifty is not making much headway, but this is changing quite quickly. Does it get above any of the critical levels?
Well, 685 was 685 was the gap. We have kind of managed to stay above that, but then there's another gap which happened on Friday, and the higher point of the gap was 825, so maybe we'll head towards that. But I'm not looking again at a big expansion happening, so that is kind of making me slightly quiet when it comes to taking the index forward. And therefore, I think trading the stocks. So a couple of FMCG names are looking good, which is Dabur and HUL. So I suggest a BTST on HUL. Keep a stop at about 27.72 and targets of 2020. And Dabur is the other one. I think that the stock will do well. So BTST has the stop at 629 for targets of 642.
Okay, got that. We actually will have Hormaz, I think, join in on Mazgaon Dock in just a bit. Mitesh, in the meantime, we'll discuss fundamentals. We've spoken to the company as well today. But in the meantime, if you could just give us levels on Mazgaon, because it's gone all over the place. The decline yesterday, the revival today. So, Mitesh, any fresh levels to track? Do you see a trade here, Mazgaon?
See, Mazgaon, in fact, did bounce back very well. And I still believe that the structure is slightly weak. Because after many days of decline, this looks like a one-day pullback. A couple of days of pullback from oversold levels. But the moving averages come in at 4,800, and then there's a gap area at 4,930. So maybe there's some more upside left from a trading point of view, but I think around those levels, which will be much significantly lower than the earlier highs, you will see supply coming again.
Okay, got that. Thank you, Mitesh, very much for that context and the advice today. You have a good afternoon, and we'll connect again tomorrow morning. Speaking of Mazgaon, let's bring Hormaz back in. You remember yesterday on this show, you heard Hormaz talk about this ICICI Securities report, which was raising all kinds of concerns, a substantially lower price target that we heard from the management today. Hormaz, what have you made of all of the up and down on shipbuilding stocks?
Lots of questions that were around Mazgaon Dock, and actually for the entire shipbuilding space as well. The management today was candid enough to answer all of these questions pertaining to the slowdown in the order book, the margins, and all of these aspects of the company itself. And with regards to the order book, it mentioned that the current order book is at around 40,000 crores. It is expecting substantial orders to come in the next few years. And he was also, the CMD mentioned that by the time the current order book is liquidated, by the time they execute this current order book, they will have substantial new orders already in place. So that order book will keep getting replenished as time goes by. He's expecting new orders worth 27,000 crores for 3 submarines that he's confident of winning in the near future, is what he mentioned. But the bigger aspect, though, was on the margins. And if you know that Mazgaon Dock reported margins of 27% in this quarter, and that is a significant jump from the 8% margins that they had reported in the same quarter last year. But that was also because there was a significant reduction in costs this quarter, and that is what aided the margin jump. And the CMD also mentioned that these margins will not sustain as we go forward, irrespective of the order book mix. But as a healthy level, he mentioned that 10 to 12% is a healthy level for FY25 that the company is working with. And it is similar to what ICICI Securities also said, that the margins will taper off as the order book keeps getting executed. Let's listen in to what the management had to say this morning.
We have a current order book of around 40,000 crores. Recently, we have added 4,600 crores of a offshore project from ONGC. Last year also, we received fresh orders worth approximately 7,000 crores. So if you look at the number of vessels which we are executing today, we have orders for around 30 ships which are to be delivered over next couple of years. There is an order for P75I submarines with AIP fitted, where MDL is participating along with TKMS Germany. As per the reports available with us, the field evaluation trials of Mazgaon Dock Shipbuilders and TKMS have been found to be successful. And this project also would be progressing at a desired pace. So maybe next year we can expect positive developments on this account. We are out of 4 destroyers, we have already delivered 3. and we are scheduled to deliver the fourth one also this year. So this project would be closing. So any cushions which are kept with respect to liabilities that may arise. We are a cash surplus company. There are no working capital concerns, and there are no liabilities in the form of debts or any loans. So, with respect to the investments, also there is a sizable accrual in the form of interest income. And as far as the projects are concerned, projects may reasonable margin would be something around 10 to 12%. And taking the repair verticals, the offshore projects, which we have now started in a significant manner, without assigning any numbers, I would say that anything about 10%, 12% would be a reasonably healthy margin.
Well, that's the big stock of the day. Mazgaon Ship up 5% for the year. Now it's up close to about 95%. So the bull charge continues. Get into a break. We'll come back with more on the markets on the other side. Stay tuned.
Welcome back. You're with us and we're in the final leg of today's trading action. The market is actually looking quite good. 80 points up on the Nifty. So it's been a late surge and a big one on the headline index as well. Let's now get you to another CNBC-TV18 exclusive. Expect Ambuja Cement's volume growth to outpace the industry at around 8%. That's the word coming in from Vinod Baheti, CFO of Ambuja Cements. Earlier in the day, Nigel caught up with him to discuss a whole range of issues, including possible consolidation and, of course, whether there's going to be a corporate restructuring within the Adani cement segment. Let's take a look at some of these soundbites.
In terms of the fiscal, let us say we will discuss about the balance part of the fiscal. The balance part of the fiscal, I believe that it should grow between 7 to 8% kind of thing. So far as Ambuja is concerned, I strongly believe we should be closing more than 8%. So we will be that way outpassing the industry. So far as if I look at the larger horizons in next 5 years or 10 years, this industry I strongly believe should be growing above 8 or 9%. As of now, our market share is overall around say 12 to 14%, and we will be moving to 20%. And if I see an interesting situation here, that we are the ones with an expansion of our capacity to 140 million tons, we will have an improved market share compared to others who are also expanding, but they will be retaining their market share. So when I look at say from 14 to 20%, I have a 6% improvement in terms of my market share at 140 million tons capacity.
That's Ambuja Cement for you. Let's invite Mayuresh Joshi, Head of Equity Research at William O'Neill, on the show now. Mayuresh, come in on cement. What you heard from Ambuja Cement, I mean, he's not talking about that there will be a corporate restructuring, but he did say that it's the ideal situation. Where do you stand on cement, and particularly this entire Adani group of cement companies?
Afternoon, Rima. No, I think we remain constructive on the sector as a whole. And our estimates are that in the second half, there should be a significant amount of demand-led volume recovery. And therefore, operating leverage should play out very meaningfully on a lot of well-managed cement balance sheets. And therefore, I think both the Adani Group stocks, ACC as well as Ambuja Cement, are attractively placed within this sphere. Having said that, the expectations in terms of volume growth remains decent for both these companies. The expectations in terms of input costs should be relatively stable. And even if there is some element of marginal increase, it should be backed by demand, which means it should be a good pass-through in terms of ultimate realizations and end product prices as well. The distribution reach that they probably got and the location of their various plants from a geographical perspective also gives them that added advantage. So I think remain positive and constructive on the sector. ACC Ambuja is something that we will remain positive within the cement.
Okay, that's on the cement side of the market. Just taking a look at the up move now on the Nifty in this last leg. Some of the other names that have joined the fray include Titan. Pharma anyway was doing very well from the morning. So Divi, Cipla, they're right on top. Life insurers have had a second good day running on trot. And then you have some other names like Asian Paints, HUL, etc., Nestle, ITC. So a lot of the FMCG names catching up with their pharma counterparts. Mayuresh, hi, good to have you on the show. Life insurance, there's been a lot of buying, especially last couple of days, sustained buying. What do you think of the space, and do you like anything here?
Afternoon, Surabhi. Again, I think we continue liking SBI Life as one of the top picks within this space. With the changes and tweaks that have probably happened in last year's budget, obviously a lot of product mix changes have probably happened. And those product mix changes are now getting reflected in terms of better sales. Having said that, I think the margins of these new products are relatively lower. Therefore, you'll be finding a situation where the VNB margins will be a tad bit lower in the next few quarters because of the product mix. The renewable premiums also should be steady state for a lot of these companies going forward. And the operating expenses, including the marketing commissions, albeit on the higher side for players like an HDFC Life, ICICI Group, should get contained as these products mature over the next few quarters. So I think a good space to be in. SBI Life, however, Surabhi, I think ticks all the check boxes that we're probably looking at in terms of VNB margins, in terms of the product mix, in terms of the bank insurance with a behemoth like SBI by their side. And therefore, I think the operating expenses and marketing commissions are still in higher single digits compared to the rest of the pack, which makes it a little bit more attractive in terms of embedded value growth going forward. EPS rating, RS rating, and satisfies most criteria that we've set out on our cancelling parameters. So I think SBI Life remains and would remain a top pick in this space.
By the way, Tech Mahindra has now moved to the day's low. Remember, there's a CLSA downgrade, and Tech Mahindra saying that the stock has been an outperformer. It's up 25% year to date, outperforming the Nifty, the Nifty IT index, and plus, the global telecom companies capex has remained unchanged this year, and therefore revenue growth may be a bit muted. And it's not just Titan, even Kalyan Jewellers has seen a spike. So generally, all these jewelry companies are inching up. Kalyan Jewellers is now up close to about 2.5%. Mayuresh, quickly between Senco, Kalyan, Titan, which one would you prefer?
I think we have a hold rating on Kalyan, Viva. The dynamics for the sector, again, looking good. The organized players should benefit significantly with the moves that we've probably seen, both from the regulatory angle and the budget announcements that have now also happened in terms of slashing off custom duties as well. That does augur well for organized players. Kalyan's dynamics, both in terms of margins, performance stability, the ROE improvement, the deleveraging on the balance sheet, and the opening of new stores both in India and South and in the Middle East, and stores outside the South, augurs well in terms of good growth going forward as well. So Kalyan is where we continue our movement.
No, got that. Mayuresh, in the afternoon I was talking to, I picked the phone, I was talking to an investor, and I sounded a little worried. So I asked him, why are you sounding, you sound a little worried. So he said, well, all my stocks are performing so well. I don't know what to do. I mean, it's that kind of a market, isn't it? It's so broad-based, and it's really quite something. When you look at the screen, just a long list of really buzzing, volume-led movers. It's not narrow at all. So that's absolutely great to see. Mayuresh, stay with us. We're going to come back to you on the other side. But let me just